So let's get going. So if you guys have visual, let's go to the PowerPoint. So again, my name is Marc Nicolas. I'm the founder of the Day Trading Zones. I trade every day. Still, I started trading when I was 20 years old. I'm 43 years old now. I've started my career in prop firms, proprietary trading firms, where you do get a split and pass your licenses. So in a professional environment, I moved to an hedge fund called JP Capital, which was the right hand of Andover Trading when you were a good trader, till 2001 when they had a financial issue with the 2001 9/11. So today, everything that I'm going to share with you guys is based on experience. It's based on the fact that I'm trading a 10,000 to 30,000 options contract every month. We are going to look at real case money studies. We are going to look at trades. I think by now, everybody have heard about a lot of concepts all day, which are great. There's been a lot of great speakers, but at the same time, it's about doing. It's about trading real money. You know, this industry is very black and white. Do you trade? Do you trade real money? And do you make money or lose money? So those are the concepts and stuff that we are going to look at. I trade 70% of the time weekly options. I overlay and stack my weeklies with my monthly for defense. And I do 90% to 80% of my trades are out of the money. Credit spreads, naked puts, and strangles. I do iron butterfly, they call it iron fly lately. I do a lot of those, and I do a lot of directionals where I double, triple my money. And I'm going to show some of those trades right now, and I'll show you some of the trades. A lot of speakers spoke about Amazon today. Well, I'll go over this particular case study. Can everybody see my account? Quick yes, no would be appreciated. This is a real account. This is not a screenshot. I'll show you some screenshots, but this is my real play of Amazon and how it closed the day here. So we'll go over Amazon, how I played Amazon. There were other case studies that I've done this week that I'm going to show you on this account. Where I had CMG, I kept 2 contracts to show you how far out of the money I was. I sold it for 30 cents. It crashed completely to 0. I want to explain how I was in advance pre-earnings to that move. Pandora reported yesterday, same idea, crushed, sold pre-market, the 16-15 put spread for 11 cents, which is an 11% ROI in 24 hours, crushed to 0. Added to my positions today for 20 cents at the open this morning, crushed to 12 cents. So all of those type of stuff that you guys are going to learn. And we'll talk also about portfolio management, you know. So again, weekly options, as you know, have grown in popularity, okay? They consistently have grown up and up in volume. One of my bread and butter trades, so about 50% of my trades on the option side. And do I trade futures? Yeah, I do trade futures as well, but I only trade futures with a minimum amount, and I trade them for edges intranight against my options positions. So 50% of the sizes usually are based on the fact that I specialized in where I believe all professionals are, which is the SPY, the SPX, the NDX, where the indexes are, because there's no earning manipulations, there's no insider manipulations. So while I love trading earnings season, as I've just showed you with real money, but what's important to me is that when we are out of the chop of the earnings season of the indices, which we are getting out soon now, I love to trade indices. And then the other 50% of the time, I'm very extremely focused on a couple of tech stocks. You know? So now, one of the cool stuff about the weeklies compared to the monthlies is that what you have to understand is that you have 12 opportunities of making monies on the monthlies versus 52 opportunities of making money on the weeklies, which is, I call that the velocity of money and the compounding effect. So you make money week 1, which you reinvest week 2, which you reinvest week 3, which you reinvest week 4. Well, it's much more powerful than just doing the monthlies. And I still do the monthlies, but I've gravitate more and more doing the weeklies. And that's what I specialize in. So now the key questions as options traders in this room and everybody that is interested in starting in the options business, and because this is a business, you are the president, the CEO of this business, and you want to crush this business. Okay, so here's what you need to understand. Do you really need to know all those option strategies here, which are 36 option strategies? Do you really need to know what is an inverse skip strike butterfly or what is a Christmas tree butterfly to be a successful options trader? Absolutely not. And what you need to know after trading years and years and going around the block, getting blood, tears, and successes, you got to know that there's about 6 to 8 option strategies that are going to make you money. So it's not important to know the other 28 option strategies that make you lose money. And this is very, very important that you understand that, because a lot of people teach you a lot of the fancy stuff, yet only 6 to 8 strategies make consistent money. And even that, out of the 6 and 8 strategies, every strategy has a probability of success that you got to know with your support and resistance. So the next thing also that you want is you don't want to be the jack of all trade and the master of none. Do you really need to trade more than 10 markets? And that's really what you are going to figure. We, especially for people that start, have figured that all you need to be extremely successful in this business, instead of looking at all the bright, shiny objects and all the possibilities of 2,000 trades and 2,000 signals, the more you are focused on a few that works, which in this case would be the SPY for directional options, the SPX, which we sell credit spread, Apple, Amazon, Netflix, which is our 10 market. We rotate when we feel that it's time to rotate. A 10th one this month was Netflix, and Google. If you have those, and here on crude you can use USO. If you have those, it's just enough, I promise you, it's just enough for you to crush it and make money. The problem is when you enter a small trade here, on Apple, and you start looking at other stuff, right? You get distracted. Then after probably 2 years of doing those 10 markets, I would call it the graduation day. If you've proven you can be consistent with those markets for the next 2 years, you can graduate to more fancy stuff. And like I showed you, look, I traded Pandora, which is not in my 10 markets, but I used our day trading zones. Like I said, that we do a research and analysis here on Thinkorswim. We have 10 markets. Those 10 markets I was showing you. And every morning we wake up. So those are my 4 screens. And what we do, and I'm going to show you and explain to you, it's not just show you concept, how I structure those trades. And I have also a live event next Tuesday at 8 p.m. Where you guys will be probably invited if you get your PDF and your free videos tonight. I am not giving you any offer. I have real money videos with a PDF that have a lot of powerful stuff to help you over the weekend and absolutely free. So I trade on those 4 monitors. Actually, I have 5, but the other one is for really browsing. So I start the morning, I look at our full Pro Tools, so I look at trend. What is the immediate trend? So the immediate trend is defined in your chart. Whatever you look at, 60-minute chart and daily chart. Then I look to the second component. What is the main trend? Weeklies and monthly. So here it's up arrow, it's immediate trend up. The blue dot, main trend up, and we look only for longs. So we don't go counter trend. We have 27 zone and our full pro tool, which is only available for the professional side, financial advisors, hedge funds, and the mastery students that I do 3 times a year, that I take under my wings for a 1-year program and a 2 weeks boot camp. It's done only at 3 times a year. So these are the 27 zones. The 27 zones, we synthesize them here in the think or swim buy zone, sell zone, caution zone in only 7 and 9 zones. So now you can see that I have a visual tool. If we open Amazon for today, I have a visual tool to tell me where is the resistance. So I had the resistance almost right on today. 53.28, which is the bottom of the buy zone. So that's the buy zone. At the extreme of the buy zone, usually we look for sell. And I am a very visual person. I don't know about you guys, but I'm very visual. So I took all that knowledge of doing those real trades over the past 23 years and combined it into indicators and mentoring and real time and helping the community, having tools, training, right? And trades that they can pay their membership on. My entire idea always is return on capital. You invest on us, I want you to recoup your investment in 2 trades, 3 trades, and then everything is pure profit. So here's what happened on the extreme sell zone. We are looking for buy. And then you see this orange here, derived from the full pro tool, is a caution zone where we have to be careful. And this is the time it helps me to know I need to be out of the money. So as soon as the stock passed that 421, or also we look at expected move from the market makers, but all our zones are based on cross price action from the monthly chart to compete against the high frequency trading system. The monthly chart, the weekly, the daily, the 4-hour, the 60, and the 5. And what happens is we take all the stuff that I've traded with real money, indicator, the stuff that I have used from the full pro tool, and we combine it in those 27 zones and those train tools. And then for the retail public, initially when they join us, we make you focus on those 10 markets just visually to get this. So now if you look at my Amazon trade, we're going to look at my Amazon trade on my real account there. And we put the, we go here, I go back to Amazon. You can see that pre-market, and I'll show you the dates. Can everybody see that credit spread right there, everybody? This credit spread at the 345, 342. Amazon was around 375, 380 at the close yesterday. Do you guys see it? Okay, cool. So here's what happened. I sold this credit spread for 33 cents, and it crashed completely to 0 today. Okay, and you can see that I took those spread. It's no BS. And I went this morning after the earning was released because I know what is the probability of a continuation of a move after the earnings, if it's going to continue up above the expected move or down below the expected move. Because what happened essentially on Amazon, if I am correct, we were at about 475 pre-market, right? You had 50 points, that's your expected move, 375, that's 425. And then if you do the expected move on the other side, it's 3, you minus is 325. So this was the 68% standard deviation from the market maker. Of course, they blow that, right? They blow that and they go above today. And at about the support of the expected move, do you guys see how I took a continuation trade today? By the way, this was a 10-10. I just back ratioed that thing with another trade. Okay, do you guys see that trade? But it's still a back ratio. I made $283 on that trade, plus the 193 there that was still running at the close, right? So not only I made a pre-market trade that killed it because we knew the trend. I'm going to show you how we knew the trend, how we knew everything. But I did also, based on probability that I have, a continuation trend at the 430, 425 on Amazon today. Well, all of this in 24 hours, and you can see it's no BS. If I click here on you are a TOS user, can everybody see the time and the date of those trades? Bruce, Chris, you guys see it? John. So you see that those trades were taken on 4/23 and 4/24, which is the day before the earnings and the day of the earnings. Okay? And so it's very powerful because with the knowledge, made $850. So I'm going to show you how with you today, the concept of what helps me crushing trades like this. And nobody would do that unless you pay for a course. So this is my 1, 2, 3 punch. This is one of the couple of strategies that I do again and again to replicate money, to create consistency. Now, I have a question for everybody in the room tonight, okay? And I promise you we'll try to wrap it up. Believe me, I understand you guys were the last one, and I've been waiting for you guys all day. So, what is the most important for you in trading? Making money, being consistent, wasting time, trading safely, freedom of time, staring at a computer. What is, just curious for everybody in this room, the most single important factor that is for their options trading? What is it? So we have Edwin, consistency, Silva, low risk, cannot say, okay, making money. Okay, so if you guys want to make money in a consistent and profitable way, you got to start your trades like this. You go down, the trade goes down, 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 down to your main trend support. Remember those monthlies and weeklies are your everything. Then it crosses and it recross above. When the market recross above your support, there's something called a shift of momentum. And typically, you have a higher probability of success when the trade comes back above, okay, than chasing. If you chase here directionals, you are going to get crucified on the call side. But when you have a cross and a recross, you have a first indication that the tape is shifting. And so to make sure of that, or to make sure that you don't get caught to a double bottom, or don't get caught to an inverse head and shoulder, you start that whole process below the main support with a credit spread. That's punch number 1 that I do. Punch number 2 that I do when I have a cross, recross, retest, higher low, I'm opening a directional trade at 15 to 30 days. The reason I am not opening the weeklies on the directionals, especially if I intend to keep the directionals intranight, is because I'm going to lose on the time decay. Now, if you look at some position I've taken before, like on October the 22nd, this is April. But if you see those positions at the low, a week before the low of October of the entire market, the first day, October 16, we hit the absolute low in the market. I had taken 10 contracts of those 184 calls for 309, but they were very expensive because the volatility was expensive. So what do? Is I bought them, and every week I do the 1, 2, 3 formation. I reduce cost, reduce cost, reduce cost. And you've seen that I over triple the directional trades. And this is very powerful, okay? Because this is the exact process. The way I did that 4,000 or 465 running is by doing processes of the 1, 2, 3 punch. It's one of my mini strategies, and I keep what? Look what I keep to the entire portfolio. Positive theta, positive decay, positive decay, positive decay. As you've heard from already all those speakers today, okay? By now, coming at the last speakers being me, now you know what time decay is, right, everyone? And you know what theta is. And I keep that weekly check and that daily check keep on coming. 91 bucks, 100 bucks, 200 bucks. You know, I have 6 trading accounts. This is one of my smaller one, actually, TOS, right? And I keep that decay. So even when I take directional risk, I keep positive decay. And I also marginally, you can see, I had longs and I had short at resistance day trading zones. and I keep a theta almost neutral, -3. You want to stay positive, but this one is neutralized by selling the opposite side on the resistance, which essentially becomes either a debit spread or a diagonal. So look again the presentation, because this is very powerful. This changes your life if you do it properly. So I'm directional here, I'm credit spread here, so I avoid the double bottom, the head and shoulder, the inverse head and shoulder, etc. Then I'm long here, 309, right? He goes here, week 1. I reduce my cost basis, I believe, by 30%. I will have to show you. But I think it was 80 cents or 90 cents. 30% on week 1. And on week 2, I reduce it about 15%. The time is done, I reduce my entire trade by 45%. So everybody in the room, is it better to be the sucker who buy retail or to construct yourself, your trades wholesale, like a professional, where you keep an inventory of positive theta with cost reduction and time decays on your spreads and everything? Which one is better, buying the 309 or buying 309 minus 89 cents minus the 50 cents on week 2? Because I can show you here, see, on we go back to this screenshot, you can see on week 2, which was the last week of me having this option, I reduced the cost basis. Oh no, hold on. Are we in another? Oh no, we are on my earnings place for this week, sorry, from April. Here we go. If you look at this, we're still on the 22nd, because they are both 22nd. Here. Okay, so if you go back to this triple on the directional, you saw, I saw this for about 50 cents to 53 cents to 45 cents. So call it a day at about 50 cents. So I had a cost reduction of 50 cents here, which is about 17% reduction in my cost basis of 309. But I have a short, hold on, I'm going to show it to you, a screenshot that shows that on the low, the absolute low of the market, I did that 1, 2, 3 punch system, and you can see the cost reduction of week 1, which I feel is very important that you see, because it helps you understanding, oh, say, shit, this guy reduces his entire cost by almost 50%. Can everybody see the screenshot now from October the 16th, which is the original trade? Do you guys see that trade? Okay, cool. So here's what happened now. See, what happened is I took the absolute low that day, the 10 contract at the 309. But look what I did for the next morning. I sold right away the DTZ resistance for 86 cents. So look what happened now. Week 1, this 309 retail price directional with a lot of implied volatility cost basis has been reduced week 1 by 86 cents. That's almost a 30% cost reduction. And I just showed you on week 2, I reduced this entire cost by another 50 cents, which was another 17% cost reduction. So is it better to buy at 309 or 309 minus $1.36 cost reduction? See how profound? This is the type of trades that will help you again and again to be extremely powerful in this business. Other trades that I do like this, like for instance, this $4,000 that was sent to our weekly action videos. We send action videos with money trades and what to expect next. So they are very powerful. They are free when you, I'll give you the link at the end where you can attend our live event Tuesday and also get our 3-part training series videos with your PDF. And what you get, and you'll get access to the weekly video for free. We and I and Kevin soon and others on my team will put some videos to help you. And so that's the latest videos we show with all our earning plays, everyone. All our earning plays. And the video was sent yesterday to everybody. before the market open. And those are the stuff that help you. You know, we constructed trade on how to construct the Amazon trade, how to construct the Google trade, and then, of course, use your processes and see what helps or what doesn't help. But the trades like this are only possible if you understand this slide. This slide has changed my life and my trading. Wayne Gretzky, which was one of the greatest hockey players of all time, says he didn't go where the puck was, but where the puck was going to be. So I repeat because it's very profound. He said what made him one of the greatest of all time, he was not where the puck was, but where the puck was going to be. And all my trading for the past 23 years, you know, and it took me a long time to really grasp this thing, you know, by constructing the research, the analysis, the tool, the buy zone, the caution zone, the sell zone. All of this led me to create the day trading zones and tradingimini.com in 2002. Because if you look at this thing and you look at my Amazon trade that just closed today, did I anticipated where the puck was going to be? I didn't even do an iron condor, guys. I didn't even do an iron condor. I didn't do an iron fly. I didn't do an iron condor. I went straight for the put credit spread. That shows that I had confidence not only in our tools and processes, but I am one of those rare that puts real money where his mouth is. And the trade is there, 345. Well, look at Amazon a day later. It's 100 points above my short strike. And same this morning, as I've showed you, the expected standard deviations was at the 430. And guess what? I took the same trade again, another put credit spread for more money today to make another 283 bucks plus by selling the 430 for 25 put spread. So how do we do that? Well, you look at the full Pro Tools. I told you I derive everything on the full Pro Tool. And everybody, if I zoom and zoom here, everybody is going to tell me on the weekly full Pro Tool DTZ since January, February timeframe, what is the immediate trend on day trading zones, up or down? Up, right there. What was the main trend? Blue dot. Up or down with blue segment retracement that tells me exactly what I'm supposed to retrace with the important dash. Here are the places where I'm supposed to re-enter. What was the main trend, which in our tool gives us a 70% plus probability of success, okay, of a continuation? Up. So coming pre-earning market, did I add a fair assumption? Especially with those MACDs, the slow MACD, those are powerful MACDs we use with our hedge funds. The fast MACD 619.9 that you can use in any platform, the 1226.9, and this one never crossed. Did I add a fair assumption that we would have a big rebound from this 380 weekly DTZ? Yes or no? Did I add a probability on my side, at least enough for me to risk? How much money did I risk? I risked blah 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 1,500 bucks on this trade. Yeah, 2.5 times 7. Okay, so enough that I placed a $1,500 bet on that trade. Okay, so what we do is we take all this information, the up arrow, the blue dot, the blue segments, blah blah blah, and every day at 8 a.m. in the morning, you are being delivered. We wake up at 5:45, 6. Manually, we try to synthesize the full Pro Tool a little bit for you guys to have a game plan. So we came this morning, we knew it broke already the standard deviation, so support was here. This is, by the way, exactly where my short strike are for 30, for 25 there, and we knew the resistance. So when you are armed for the continuation of the earning plays, when you are armed with all of this, it helps you. And I use this religiously, the full Pro Tool and the day trading zones, buy zone, caution zones on those 10 markets religiously every day. You know, I have a screen completely dedicated to my 10 markets and I switch to the markets that I trade. Ideally, what you want every day is you come and say, out of the 10, which one has the highest potential to make me money today? And you only focus your eyes on 2 out of the 10. And this is how you are going to become successful. Instead of being the jack of all trade, you know, wait 2 years, because I'm telling you, very like I've been there, done that. Like I told you, I'm trading 10 to 30,000 contracts a month, right? That's not small volume, you know. And I'm telling you that if you are not mastering those 10 markets, you will never master those trades that I showed you here from the week, which are the earning plays like this, which I use a lot of what we do. And because it takes time to be good at it. BBG, CMG, FTI, Intel, Pandora, you know, was not in the list. Under Armour was not in the list. And so I use those, and I'm telling you, it takes a year or two. Be focused. You know, you want to make consistent money and make money. Well, perhaps initially focus on the ones that have the highest probability of making you money. Okay? Now, a little bit about me, and I promise I will wrap it up quick because I'm sure you're sick and tired, and it's already after 4 on Friday. I started trading, like I told you, 20 years ago in prop shops. I passed my Series 7, 55, and 63. I started trading from 100 shares, even the simulator, those guys put you on the scene, to about 10,000 shares. I started with NASDAQ stocks using a hammer process system, progressed to futures and options. I've been there, done that. I worked for a small hedge fund at JP Capital. I switched to trading my own money after 2001, which means I have been trading my own money for the past 14 years now. I blew up some account adjusting to trading alone, but what happened is I've never blow up all my accounts. I always have 4 accounts to 6 accounts, and currently for the past few years, 6. I segregate the accounts, and that's a very important concept, because if you have accounts like this, one that is directional, one that is credit spread, and you better do that because it's very smart really in order to help you not blow up all your assets. You know, if you have 4 accounts and you have a $10,000 account, you have 25% of your asset, or $2,500 on each account, let's say, right? Okay, so what happens if you blow up your directional account? You lose, what's the percentage loss? Correct, 25%, right? But now if you put, and I've seen this being one of the biggest mistakes of all traders in this industry, is they play too big of a size. They don't know to size their trades, or they put all their money into one style, just credit spread, just directionals, just futures, just forex. And you know what happened? I bet you, what happened when you lose 50% or 100% of your account? You are gone. You have to go back and work. You are gone. Here, you lose 100% of the directional account, you lose only 25% of your account, which is you can recoup from. I built over $1.2 million in net trading profit net worth before being divorced 3 years ago. I went through, after being married 20 years. I am the father of 2 twin boys, and I blow up. The biggest blow up I've been in my life was my divorce, guys. So the worst trade that I had was my divorce. So I recommend everybody to stay married or choose carefully. So I've helped fund managers like Dennis Moraes to grow from a $20 million fund to over 80 million. Actually, now it's in the hundreds of millions. Horizon Point Wealth Management from Dennis has merged with a bigger company. I've helped beginner like Ramesh, who is a manager in California for Intel, go from negative to positive $48,000 in 1 year. And it's very well documented on the internet between tradingemini.com and day trading zones that we have been helping traders over the years. We have about 100 reviews. Of course, you have good ones, you have bad ones. You know, you cannot please everybody, but you'll see that overall we have a great reputation. So I don't have anything to sell you. I'll take some Q&A. All I have for you is an opportunity to be part of our community. And all I have for you today is this, for free and absolutely free. You can get video 1 on how to generate maximum profit and minimize your losses from our free training series. That I have to give you the Real Traders webinars link, otherwise you're not going to get that. Video 2 is the right and wrong ways to make small trades pay big. Video 3 will be case studies from everyday traders. So they are case studies from my students. They show you their credit spread. As a matter of fact, I have a student, Matt Farrell. If I come here, we have a trading mastery private. That's my elite private mastery group, guys. We have 260 members on those 3 times a year where I take a few guys under my wings. So you see, it's not like 1,000, 2,000, where you are just a number and nobody cares about you. But look at this guy, Matt. He's a great guy. He had never done any spreads, never had he done any spread. And Matt went to the community, because you have to, when you do the mastery, you show your entry sheet, your exit sheet, we critique your trades. And Matt showed, see, so that's a real post on Facebook. He's a real guy. See the commentary. Awesome, you inspire me, some great trade, blah, blah, blah. So it's not about me, it's about you. It's about you, the trader, you know. We don't do advertising, you know. It's about you, the trader, guys, you know. Can you do those type of things? So Matt came here, and if you look at the spreadsheet, and hopefully we can zoom. How do I zoom this? Blue. How do I do? I was trying to zoom the Matt thing, but Matt did here. Matt did $17,000 in, let's reduce, $17 in his spread. Can everybody see that? In about 4 months, $17,000. As a matter of fact, he had about like 30 trades, I think, and he had very, very few losers, guys, on that spreadsheet. Okay, very few losers. So this is stuff that are important. So again, if you want this PDF, this free PDF, this video on how to generate maximum profit, minimize your losses, right and wrong ways to make small trades pay big, and your case study for everyday trader on the PDF, and an invite to our live event Tuesday night, just go to Real Traders Webinar /DTZ free. I repeat again, Real Traders Webinar /DTZ free. So hopefully I'll be able to see everybody and go deeper on a lot of the principles and the stuff that we talked about. I think we have a little time for Q&A. Let me try to answer some of the Q&A. That's perfect time to try to help you. And of course, if I don't answer everybody, Tuesday night, 8 p.m., we'll be answering as many people as possible. And my promise to the people who are going to come, it's going to really change your life. It's going to help you think about your trading differently. You know, trading as 90% of the trader blow up their account within 6 months to 12 months. You know, it's not because you trade options that you are safer. Yes, options traders are smarter. Yes, options trader can defend repair trades. Yes, options traders can take advantage of the time decay, but there's still a right way and a wrong way to do this business. And I promise you it takes time, and you don't want to cut that learning curve as much as you can. Okay, so let's take some questions. Lawrence, are you using any of the lines as resistance? Yeah, I use them as support resistance, and I use them also for a place to not trade or be out of the money. So I give you an example that is perfect, which was the SPY. Okay, let's look at the SPY. So the SPY has been all week, and even though it was very strong, it was in a range. See, that's one touch. That's been in the caution zone range. When I see stuff like this, I want to be here and I want to be here for the week. okay, on both sides. Now, if I can get here towards the bottom or the cross retest area low, I want to be a buyer. When I am here at the extreme zone, cross retest, and my trend tool tells me we have a shift of momentum, then I want to be a seller. So I want directional buyer here, direction using the 1, 2, 3 punch. But when I am in the caution zone, I have no other trades than selling time decay. So the beauty of this, it avoids you to taking the crappy trade. Okay, next questions. JW, Apple next week. You can look at it, and I'm going to tell you. Monthly Apple DTZ, up arrow, blue dot, blue sec. So we have the trend up, but write that down now. 116 is going to be your support for next week if you want to be safe. 116 for the short strike. Go here. It's the same zone, guys, but I just want to show you a little bit. Instead of flipping charts, I always use a 60-minute chart where I have all this information, but I want to show it there. So now for next week, you have the 116, you have to be careful, and this 125. So long we stay above that 116, 125, we are going to go, okay? But I'm telling you, as soon as we are below 125, it's game over. We go all the way to 116. Now, even better, if we could stay above the 130 area, we'd continue going. Now, so the trend is up, okay? The trend is up on Apple. But me, I would rather get on Apple here. I don't want to be the sucker chasing Apple, okay? Now, the way to play this is if Apple reports and it gaps up, fine. Then we'll play the continuation of the gap. Does that make sense, everybody? But I don't want to be the guy who is going to anticipate that on Apple. Apple is not. See the difference. What was the difference between the Amazon trade and the Apple trade? Can everybody see? Look what happened. Apple has already tested the retracement, the 125. So you are late 5 points. When I took Amazon yesterday, did I take it right at the bottom of the deep trading zone at the retracement area? Yes or no? I showed you. I took it at 345, 342. The retracement on DTZ right there. Look here, the chart was 375. It's a complete different chart. Look at this. When I took the trade yesterday, you know, my trading allowed me to get here at the bottom. It's a big difference than being the sucker running after Apple above 130. Does that make sense, JW? Okay, 2 more questions and I think we'll wrap it up. C. Talmaji, I have no idea what was Matt's initial capital. I have no idea what he traded for, but he probably traded with more than $30,000 because he took a lot of those credit spread with 10 contracts. Next. Yes. Well, Foster, $600 is going to be rough. You know, I don't want you to feel like you can, excuse my French, do chicken soup with chicken crab. But what you can certainly do with $600, you know, is maybe take out of the $600 $60 or $100 for a directional SPY. Try to learn that's being done on paper for a month, 2 months, or 3 months, and put everything else, which is 90% to 95% of your money, $500, and do only 1 contract, credit spread, learn the business on the SPY. Next. Actually, Luis, my event next Tuesday will be weekly options and stacking with the monthly for small accounts, doing small trades that pays big, like I've shown you tonight. Next. Let's see. Next we have Arun. I think the guys at Real Traders and Kevin will have a recording available. They are good guys. I work with them as often as I can. When you buy a call and a put, what's your delta? Less than 50%, which I prefer because return, or more than 50%? That's a good question. I'll answer that next Tuesday. Every day of the week I change and adjust my deltas. Arun. And the reason being, Tony, is because of the acceleration of the time decay. It's not very smart to keep a consistent delta when you do your directions. I have a very systematic process. I am obsessed with processes, guys. I have systematic processes to get in, out of my SPY, do the 1, 2, 3 formation, and other option strategies. Luis, yes, I answered these questions. Again, the link, Felipe, for you guys to get your free report and the invitation for next week, webinar, Tuesday, 8 p.m. to get your free videos also. So watch those videos if you can. They are 10 minutes long, I believe, and you'll be so much more prepared for next week's webinar. It's Real Traders webinar /DTZ free. And I believe in your control panel, Kevin has posted, and no, he has not posted the link, of course. So hold on 1 second. Okay.
It's there,
so
Marc.
Just posted the link for you guys. Okay. Okay, awesome. Robert, there is, but I just cannot say, I don't want to batch a broker against other brokers unless you are in my community. I just cannot say it publicly. But I am a big believer. I'm a big believer that, okay, let's put it that way. You have to look for the best stable company that is not going out of business tomorrow, but that has the best commission for you. Commission is a big problem, guys. Before I leave, and that's the last things that I will say, when I trade 10,000 to 30,000 contracts a month, depending on what's going on in the market, I don't force myself to trade. If I trade an average of 15,000 contracts a month, if I save 10 cents on my commissions, how much am I saving per month in money for me and my family? $1,500 a month, a month, sorry. So which is $18,000 a year. Well, that $18,000 a year is much better in my pocket than their pocket. And if you talk about 20 cents differential in my commissions, I'm saving $36,000 in commission. So now, what is that better? You better off having this money for the brokers or you and your family. Personally, I like to go on vacation with that money. Okay. Tony, don't see your questions, Tony. I told you, Tony, I answered your question. I said, you come Tuesday, I'll tell you, because every day I told you there's the acceleration of the decay from Monday to Friday, and I do not do the same delta on a Thursday and a Friday. I lower my delta and I lower the risk. And like I told you, I have a specific process on how I do this. Okay. Again, guys, hopefully this was helpful. I mean, there's a lot of tidbits that hopefully will help you think about your trading differently. We'll dig into all of this deeper next Tuesday, 8 p.m. And hopefully this was helpful. And we were able to finish before all the other speakers. You take care, everybody. Thank you for your time. Thank you for staying after everybody on a Friday. Even me, I just want to get the hell out of here and go see my kids. So you take care, everybody. You have an awesome weekend. I'll see you Tuesday at the live event. Again, Real Traders webinar /DTZ free, and you'll get also your free videos. Take care, everyone.